Hey guys, Mike here. So first and foremost, the Fed came out with the minutes. Shocker, they kicked the can down the road. Nothing big about it. They're going to keep letting inflation run, do their thing, okay? So don't be worried about that. I don't know why anybody was surprised by that at all. And so, at least the markets did turn green as I'm recording this, so that's good. But what, I've been talking, or what I want to talk about now is something I'm pretty passionate about, and it's one of the things that pisses me off. And I've talked about supply chain issues for a while now, but I've also talked to you guys about how these companies are taking full advantage of us, and especially right here in America, right? Because America's known for some great things, but after the dot-com bubble and the '08 crash, one thing we're really known for is greedy corporations and monopolies, which don't really exist. But you see these companies, how big they're getting, and like we just keep letting them get bigger and bigger. And what they're doing is, and I've been saying this for a while, they're not just passing on the extra cost. They're passing on the extra cost and a lot more to us, and they continue to do it. It ain't stopping. It's going to continue to go on for the rest of the year. Okay, and how do I know that? Because I'm listening to earnings calls, right? And so went out and I found you somebody who does this for a living and has researched this, has testified in front of Congress, and listen to what she has to say. And if it don't piss you off or kind of get your blood boiling, because they're basically in plain sight just taking your money, right? For no reason. Not that their products got any better, and then they're bragging about it on their earnings calls that they can do it to us, right? And so, because they know there's nobody there to stop them, and they know we're just going to keep buying it, I guess. I mean, that's kind of how it works. And I'll show you, actually, unless you listen to one of the calls, like maybe a 15-second blurb of that one, how many times they've raised prices now, and why this is a big deal, and why it's going to continue to be a big deal. One, because people just think inflation is going to fall off the roof, and that's not going to happen, right? It's going to start curving. The problem is you'll have the supply chain issues start to go away, but then you're going to have these corporations, a lot of them, and they're just going to keep passing on and keep raising those prices up. Okay, that's what's continued to happen over the last 6 to 8 months. So what's going to continue to happen. There's no reason for them to stop doing it, right? They have to get to a certain ceiling before they'll stop. Okay, and so that's why I get very upset, because they're putting a lot of people, and I've been in this situation when I grew up in a small town, very poor, right? And if you're in that situation, you know what I'm talking about, where you get boxed in, you have no choice to go to some of these companies to buy their products, because there's no other competitor out there, right? Especially in small towns, usually it's one conglomerate kind of takes over the town, runs everybody else out of business. And in this company, think about where you live at. Where I live at, you got two, or even this area, and I live in a nice area, but you have two main places to go do groceries. That's all you got. You get two, right? So if both of them are competing in prices, and one don't bring down the price, there's no reason for the other one to bring down the prices, right? And unfortunately, it ain't like it used to be where you had 3 or 4 or 5 maybe choices, unless you want to drive a long way away. And so that's where we're at. And so listen to this interview. I will pick it up on the end of the interview, and we'll go over some other things. I'll show you what is being said in these earnings calls, and then why this is a big deal, just in case you don't think it is. And so if you get anything out of it, hit the like and subscribe button. Sorry for the long intro. Here we go.
DC, Working, it's good to talk to you today. You say that the price pressures that we're seeing right now is all about pandemic profiteering. What do you mean by that? What are you seeing?
Yeah, thanks for having me. So, my organization, the Groundwork Collaborative, has combed through hundreds and hundreds of earnings calls. And this is where CEOs are obviously telling their investors what they're seeing in terms of, their financial situations. And what we see is across sectors, across companies, CEOs are just crowing about how they can raise prices on consumers, all while bringing in record profits. And that's really the root of a lot of the price increases that we've been seeing over recent periods.
Rakeem, it's Brian here. It's great to chat with you about this, because it's such an interesting and important topic, because some of these price increases could be just part of the organic higher labor costs. For example, if they're paying their employees more, maybe it's not as nefarious if they have to raise the cost of what they're selling to make sure that they can meet their margins. But on the other hand, there is anecdotal evidence in some cases of a price gouging, in which case a heavily concentrated industry with 1 or 2 major players can charge whatever they want to charge. So how do you kind of parse out what's happening behind a company's decision to raise prices, and whether it's for a more nefarious reason than another?
Yeah, let me take the wage point first, because I think that one is pretty important. You know, there's a good amount of research that shows that wages and prices are not linked right now. So the sectors where we're seeing the highest price increases are not the sectors where wages are actually going up. So wages don't seem to be a driver at all with the current price increases. And in terms of how we can see nefarious intent, you know, don't take my word for it. We have hundreds of earnings calls that show exactly that. So let's take what might be a typical day, right? You wake up, you want a cup of coffee. I know I did this morning. You head to Starbucks. Starbucks has raised prices across the board. They've also seen their profits go up about 30%. Maybe for lunch, you want to get Chipotle. Chipotle's CEO has really been talking on their earnings calls about how they're so lucky that their consumers are not reacting to the price increases. And they see that their ability to raise prices is a real strength for the business. Maybe in the afternoon, you stop by a drugstore because you realize we're still in a pandemic and you need some high quality masks. Well, Kimberly-Clark, which is one of the major producers of N95s in the country, between October and January, a 50-pack box of N95 masks, the price of that more than doubled, right? And that is exactly in the period when the CDC changed its guidance to suggest that we all switch to higher quality masks. You know, as you're heading home, you know, you're going to pick up some stuff from the grocery store. You stop by Kroger's. Kroger's CEO has said that, quote, a little bit of inflation is always good for our business. Maybe you head to the meat section, pick up some chicken or some beef. You know, Tyson, which is one of the 4 big meat packers, identified by the Biden administration as an industry where there is actually a lot of price gouging. Tyson's poultry prices, they've risen them about 20%. Their beef prices, they've risen about 30%, and they've seen profits nearly double.
And this is what you're talking about with Kimberly-Clark right here, the CEO, as quoted for saying they've done multiple rounds of significant price actions, which means price hikes, and admitted he plans on doing more through it this year as well. And here he is on the call.
While our overall financial results were disappointing, we took decisive action to offset the impact of higher costs with significant pricing actions. These actions, which began in the first half, to help us deliver organic sales growth and improve net selling prices in the second half of the year, including strong fourth quarter performance. We've executed multiple rounds of pricing, and I would say globally and generally our pricing is on track. We announced, I'll just give you an example in North America. I think we announced in March, in August, in November, and then I think we may have had another announcement in December as well. So there's been multiple rounds. You know, I will tell you, and that's happened globally in most markets around the world for us.
And you heard them, right? They had a terrible quarter, right? But what are they doing? They're doing exactly what Netflix is doing. And this is, you're going to continue to see this from companies, right? As the growth they projected slows down, what do they got to do? They have to raise their prices to try to hit those numbers, right? Because they're not going to have the same amount of people buying the products, or in Netflix's case, members signing up for their streaming service. So like Netflix just raised, I think it was 10% across the board for all their subscriptions after disastrous quarter results. Now I think they even forecasted down as far as the growth number. So hey, we'll just, get it from our existing customers and whoever signs up, and that's what we'll do, right? And so, but they're not the only ones. As you can see with Tyson right here, if you happen to go to grocery stores and shop for this kind of stuff, they ended up doubling their profits after price hikes of 32% on beef and 20% on chicken. Then you got 3M out there. They make everything, but N95 masks being one of the biggest ones, right? And their price is going up from 0.1% to 1.4% to 2.6%. And to show you how bad inflation actually has gotten, you actually have a beer company out there saying that people are going to have to drink less beer because they're not going to be able to afford the beer anymore. And I'm talking about Heineken, which just came out with this today. And it said Heineken has said beer prices will go up as it faces crazy increases in the cost of ingredients, energy, and transport. The brewer said inflation was off the charts and its cost would increase by about 15%, forcing it to change more, which could lead to lower beer consumption. So yeah, that's where we're at, guys. You got a major beer company worried about people drinking less of their beer because I think they're worried about they're going to trade down to a cheaper beer or something. So if you do drink Heineken, be ready for another big bump increase in prices. And so, I understand I don't have a problem with companies passing on costs. That's not the problem. We understand costs are higher. But yeah, I do have a major problem with companies passing on the cost and then some, 10, 15, 20% or something. That's ridiculous. That just makes no sense, but they're able to do it because, one, we take it, right? We don't know what kind of power we actually have as a consumer. And two, our government just lets them get away with it. Right? Whatever. Do what you want to do, because they've already run so much of the competition out. There's not that many competitors, right? I mean, that's just the way it is, unfortunately. And unfortunately, the biggest problem is you have a large portion of the country that is painted into a corner, because if you ever lived in a small town or a poor area, there ain't a whole lot of choices. Okay, not too many people are beating on the doors to get in there and be competitors, right? And so, those folks, as I've been there, are kind of stuck, right? If you only got a Walmart, or you only got a Target, or you only got this and that and the other, not much you can do. You're going to have to pay whatever price they want you to pay, and they will continue to increase those prices for as long as they can get away with it, and as long as we will take it, all right? And one reason this is a big deal, or another reason, is because of what's going on with, consumer debt right now. I mean, this just came out last week, and it says U.S. household debt increased by $1 trillion in 2021, the most since 2007. And most of that has to do with the housing prices increase, because those are home loans, and then, of course, the astronomical cost of cars, whether they're used or new, because you have people taking out auto loans, right? And that's going to continue. Those housing prices aren't going to stop, especially down here where I'm at in Florida, right? And then cars are still going up. People are going to need those things, plus credit card debt. And it's the worst time, because what's fixing to happen? Starting in March, we know what's going to happen. The Fed fund rate is going to go up, and they're going to continue to start raising interest rates, right, for the rest of the year and into next year. So what does that mean for people who are running up to credit card bills, taking out loans this year, that kind of stuff? It's going to continue to go up, right? I mean, mortgage rates just hit over 4% for the first time in a long time. And so, it's going to be more expensive to take out debt, which means you're paying more interest, right? And so if we do hit an economy slowdown, or that actually would help contribute to the economy slowing down, and that's the problem, right? That's where people are worried about the interest rate hikes, really, because people are like, woof, I mean, I got to pay how much in interest, right? And it puts us right back in the same boat we were in pre-pandemic, right, where people couldn't afford a $500 emergency, maxing out their credit cards, but the stuff you're paying for now is way more expensive than it was pre-pandemic, right? And so that's a scary thing. And again, pisses me off, because, I mean, it's just pure greed. I mean, we've all seen it. It's just crazy to me. Like, come on, make your profits. But the fact you're passing on these, trying to, sell us like you're just passing on the cost, but then you're actually increasing your profit margins on top of it. No, this is not okay. That's just my opinion. I don't know. Let me know in the comments. Maybe I'm just crazy. But, and this down the road, we may not feel it now, but this down the road is going to affect the economy as a whole, which will turn around and affect the stock market as a whole. And so, it's just funny to me to watch these companies report earnings, disastrous earnings, right? Have to downgrade their forecast, and they go, yeah, we're raising prices. That's the only way we can keep surviving. That is not healthy, all right? And so, on the stock market side, if you haven't owned those companies, then that's something to look to. But also, just as a human interest piece, that's just not right. So anyway, I'll stop there. So if you got anything out of it, hit the like and subscribe button. I really appreciate it, guys. Let me know in the comments what you think about that. If you have any examples or not, or maybe we're just all imagining this stuff. I don't know. So have a good one. I'll see you tomorrow.